Lots of events, lots of things to talk about. Therefore, please welcome your host, Chris Peterson, with MedianReport.
Global economic affairs on the palm of your hand from MedianReport, as well as Baltic energy scene with two upcoming and promising projects, one in nuclear, one in green hydrogen. We will weight the market values of Estonian and Latvian companies in the context of just published and released Top 101 from Nasdaq and Prudentia. All this on today's MedianReport. We will talk. China ignited a new wave of uncertainty as it declared to put export restrictions to several important rare earth minerals from December the 1st due to national security reasons. Trump reacted harshly, returning to the discussion of tariffs. The diplomatic ping-pong game is going on the whole week, and it leads only to more tense relationships between the first and the second world's biggest economies. Trump's tariff crusade was meant to shake the global order, but it's rather turning into a sideshow. His threats to crush China's economy, from banning rare earths to boycotting cooking oil, have fizzled. The IMF now sees only a mild slowdown, not a recession. Tariffs peaked at 16%, far from apocalyptic. Yet America's bigger risk lies in misplaced bets, turning away from green tech and overinvesting in AI boom that may yet burst. The AI gold rush is in full swing. 10 startups from OpenAI to Elon Musk's XAI have gained nearly $1 trillion in value in just a year. Venture capitalists have poured over $160 billion into AI. That's 2/3 of all their spending, chasing trillion-dollar dreams in software, automation, and AI companions. Even insiders admit, of course it's a bubble. But as history shows, every tech bubble leaves behind the seeds of the next revolution. Federal Reserve Governor Chris Waller has backed more rate cuts, but with a warning: move carefully. Speaking in New York, the leading candidate to replace Jay Powell said he supports continued easing, yet not the sharp half-point cut Trump is demanding. With the Fed funds rate at 4 to 4.25%, Waller sees a mixed picture: slowing jobs, strong AI-driven growth, and urges caution. We can't afford a mistake that's costly to correct. The IMF and World Bank meetings are wrapping up in Washington. Europe got its usual reminders. The main idea: Europe's resilience is fading as growth slows and structural weakness deepen. Tariffs, weak private demand, and slow reforms weigh on productivity, while debt could reach 130% of GDP by 2040. To revive momentum, Europe must cut red tape, integrate markets, and act boldly on long-delayed reforms. More on this you will hear and see at the end of the show. Baltic companies have shown some solid growth during the past year, and there have been no particular industries which were lagging behind. Top 101 is now out in Latvia and Estonia. A Lithuanian and combined Baltic list is coming out in November. That's according to Kārlis, Krastiņš, who is the managing partner of Prudentia, a company behind the top list. Before I ask questions to Kārlis, I want to go through some major parameters, and we will start with the growth. If we compare the overall growth of companies in Latvia and Estonia, then I must say that despite the slower economy, Estonia has had 8 companies above 50 year-to-year percent growth, and 23 companies about 20% growth. Latvia, on the other hand, only 2 companies above 50%, but 30 companies, or roughly 1/3 of the total list, about 20% value gain. The leader in this parameter in Latvia is Air Baltic, but Eesti Energia topped everyone in the list with staggering 107% growth, reaching top 1 place in Estonia from the number 3 last year. Leading positions, as always, are taken by banks and state-owned enterprises. 11 companies in Estonia and only 2 from Latvia are listed in Nasdaq. The top 3 most valuable enterprises in Latvia and Estonia combined are Swedbank Group, which is registered in Latvia with 6 billion euro valuation, Latvian with over 4.5 billion euro, and Eesti Energia with 3.3 billion. Though, if we could add here also companies from Lithuania, I'm afraid that only Swedbank Group of Latvia could make it to top 3, given up to Vilnius Prekyba and Revolut Holdings Europe, which of course is the undisputed leader when it comes to the most valuable companies in the Baltics. To talk about other angles of this top list, I'm inviting to conversation Mr. Kārlis Krastiņš. Just now, you published Latvia's top 101 company list. Estonia, as I understand, was a month ago, and we are still waiting for the Baltic top 30, I guess. Is it right?
Yeah, it's correct. So the Baltic top 40 will come later, and Estonian top 101 was published plus minus 1 month before Latvian top. So yeah, so for Latvia, it's for this year we have some special, let's say, situation. It's like 20s of top. So it means that 20 years have passed since 2006 when we published the first top. It's like a lot of interesting data available, but we partially have already analyzed and published. So I am, let's say, saying to everyone, please visit our homepage, look at the interesting analysis about the history of Latvian top. So about Estonia, we see, let's say, some common things and some different things. So in Latvia, there is no surprise. Swedbank Baltics is the number 1. And they have achieved like significant milestone. It's like 6 billion, a little bit more than 6 billion enterprise value of the group. It's a big success. It's plus 40% increase. And of course, I remind to the people here in Latvia and Estonia and other countries that this is due to the fact that Swedbank Group decided in 2021 to register the whole like Baltic holding in Latvia. So in Swedbank Baltic legally combines the all business of Swedbank Group in the Baltics. So the banking and insurance and other pension management business in Estonia and Latvia and Lithuania. Therefore, it's like big value, and it's by far, of course,
the biggest company.
The biggest, the largest in terms of value company in Latvia. So
let me ask you about the methodology, because I know that those companies that are listed on the stock exchange, it's quite easy because the market valuation is there and you can see it and you can actually follow it daily. How about the other companies? It's a crazy work to gather all the information and do it.
You're correct. So of course, as I've joked, and then Lena Dubova, CEO of Latvia and Nasdaq, so she accepted my joke that we said our job will be accomplished when the half of the companies from the top now will be listed. So in that moment, we will say, okay, that's our job
milestone is done.
Mission accomplished. We can go home. So, but yes, it's of course like the methodology is based on mainly like profitability of the companies, of the EBITDA level, and about the sales multiple. The multiples we are taking from the peer groups, from the European mainly similar companies from the similar industry. That's of course a lot of work to look at the peer groups, how correct they are, which companies are there, so that we can compare them with particular company in Estonia or in Latvia. So, and then we use sales multiples for the last day of first half, of 2025. And we use, of course, for profitability on sales, the last available financial year, which means 2024. So as the big companies are publishing their financials in 6 and 7 months, so it means that physically the latest or the shortest term that we can finish our job is September, October. So depending on the availability of all annual reports. And several companies, they are not using just financial year, but they're having, for example, like merge, as for example in Japan, it's a tradition. So some companies are following to that. So therefore, it's a lot of work. So altogether, to gather, let's say, 200 those values of 200 companies, we should combine at least 600 annual reports.
Yes.
Because of course, so we have to look at a lot of companies which are not in the top, but we have to look at them. Probably they have grown and they might be in the top. So therefore, it's not just 202 annual reports, but 3 times plus minus more.
Yeah. Origins of Prudentia as a company, I know it's in Riga, and it's just logical that you start with Riga, and 20 years now for the list in Latvia. But how you decided to go to Baltics as well?
So we have already since 2021 our office in Estonia. So we merge operations with the guys that we knew for a long time. So we have our team in Tallinn and our team in Estonia. So we are basically working as one team. And that was a logical step that with that, let's say, development of Prudentia's brand in Estonia, we decided to go as well for the Estonian top. Actually, before us, there was a Gilde bankers, guys that I knew from old days. They had some kind of top like 10, 20 years ago, but somehow this project was finally finished and nothing was available. Therefore, we went for this in Estonia as well.
Yeah, you mentioned Swedbank, the Baltic level, but I see that I'm looking now at the Estonia's list, and I see very, very rapid growth in a lot of sectors and a lot of companies, and especially Eesti Energia, which is 107% growth from year to year. It's amazing. It's just amazing.
Yeah, that's of course is amazing. It's of course like a little bit, how to say, related to the structural changes of the group, because everyone maybe remembers there was a buyout of Enefit Green from stock exchange, and it means that now the full, let's say, value of Enefit Green is within the group.
Incorporated.
Therefore, this is like a jump, and it's not so-called like for like, probably as analysis would describe the let's say the valuation. So it's a little bit different as Energia as 1 year ago in last year's top, but it's the same company, but yes, with different participation in groups, very valuable daughter company. So in Latvia, the highest growth is for Air Baltic, which is of course like interesting company, and it's around 70% growth, which is of course like exceptional. And yes, it's basically EBITDA of the Air Baltic doubled during the year, and that's is the main reason why the growth rate is so high. So
is it also with the with that one decision of accounting decision to the capital, or
no,
is it related to that as well? No,
actually, what I'm saying like today here in Latvia about Air Baltic, some journalists are asking. So it's still the value and the valuation what they are using for Air Baltic is let's say cautious in general, but the value which was used in Lufthansa group acquisition of 10% of Air Baltic. So we don't know so much about the nuances. We understand for the 28 million euros they got 10% or rights to get 10%. So this valuation is much higher than our valuation in our top, but it's based on the different approach. And of course, Lufthansa is a strategic player, views, let's say, Air Baltic pluses and minuses and advantages differently than purely from a profitability point of view and maybe from sales growth or point of view. So that's a strategic step. So yeah.
All right.
That's
okay. I see when I compare Latvia and Estonia, I see that in Estonia we see much more double-digit growths than in Latvia. Although we hear about the state of Estonian economy, that it hasn't been such a success as Lithuania, for example. With what you explained, that they have been more successful in growing their businesses and companies.
Yeah, So of course everyone can look as well on our homepage what is the correlation of the GDP and of the nominal value of the top companies altogether for every year. So in general this correlation is relatively strong, but not always maybe that can be used as explanation that let's say if let's say the GDP is growing, then the company value is growing in general. So we have to keep in mind that so there are a lot of companies which are exporting, and not those companies. Let's say the value mainly depends not from the let's say stage or the situation in the local economy, but mainly from the let's say situation in the export markets. What are let's say the stock exchanges there? What the product is exported or services are exported and so on. Therefore, for like Latvia's Finieris, for example, or Mikrotīkls in Latvia, let's say the current stage of Latvian or Estonian economy is important because main employees are here. So of course the taxes is paid here, but in general they depend more from like European, German, and US market because they are exporting mainly those let's say markets. So that's the nuance that we should keep in mind. But in general, the main driver as well for Latvia, as well for Estonia, actually are high stock exchange multiples. So we have seen, of course, this year is exceptional with tariff wars and other aspects where, let's say, the markets in US and Europe are up and down. So, but yeah, so the situation on the end of June was quite favorable, and basically for many companies the price to EBITDA multiple, price to sell multiple was on historical high. So therefore that gave a lot of, how to say, boost for Estonian and Latvian companies.
And now let's turn on the energy and talk about the energy. Specifically to up-and-coming technologies, modern nuclear power plants, and green hydrogen. Let's start with the nuclear power, which obviously is back in focus despite many worries and questions about its return on investments. This week, we had we read in the news that U.S. Army launched its Janus program for small reactors. Company stocks like NuScale and Oklo went soaring. But behind the hype lies a race to make nuclear scalable, safe, and fast. How real is this revolution and how it can be applied to Baltics? We will talk, this time with none other than the CEO of Fermi Energy, Mr. Kalev Kallemets.
The pursuit of nuclear energy in Baltic states started actually, and also for me and Estonia started with the Lithuanian nuclear project that actually was initiated. The first talk was initiated by Sandor Liive, who was the CEO of the national utility S01E05 at the time, and currently our co-founder and the chairman of the supervisory board. And Mr. Brazauskas, the Prime Minister of Lithuania, had a visit to Estonia in 2006, and had a discussion with S01E05 as well. And there was no idea what to replace the existing Ignalina Soviet nuclear power plant capacities with. And actually, Sandor Liive proposed, let's build new nuclear, like Western nuclear. And that was how Visagina's project started. It was a serious effort. But let's be honest, the European decarbonization policy was not exactly where it is today. Russian gas was still plentiful and cheap. And that was of course, Lithuanian internal politics remains as complicated as today. Was it back then? And there were some corrupt politicians with Russian influence, called Usakovs and Paksas, president who was recalled, and so it was pretty messy. And so the project did fail even before the referenda in Lithuania. Already when the referenda was decided, it was more or less clear that the project will not succeed. But offspring from that project was that S01E05 sent a few students to study in nuclear engineering in Stockholm. And in fast forward, I was promoting nuclear energy at the time in Estonia, but I finished my PhD in 2018 about oil shale sector, which is the mainstay of power generation in Estonia. And I realized that this sector will come to an end, and it is declining very rapidly right now because the carbon pricing, but also it's so capital intensive. So we realized very quickly that small nuclear can be a real possibility for Estonia, because we see very closely Finland, with whom we share quite similar language, like Latvian and Lithuania is a little bit similar. We see that nuclear is profitable, even at much lower power prices that are prevailing in Finland. They are profitable, and have been built, the nuclear power plants, without the state's subsidy. And they are the mainstay of power generation with 45% of the power generation. And they provide currently already for the Baltic states security of supply in decarbonized manner. So it is a good technology. And we learned that indeed there are small modular reactors that can be deployed potentially in Estonia. In 2019, we started to pursue that, and right now Estonia has officially made the decision at political level, meaning in parliament and also in government, to start the program, and we have made some developments internally as well.
Yes. I can tell you that I'm a big fan of nuclear energy myself, and especially thinking about how the world and business landscape will develop with all the data centers and artificial intelligence. And if we want really to run a modern economies here in the Baltics, I think it's a necessity, because now how we are connected energy wise, it's kind of like last century model. And but also I know that it is very expensive, and like the capex is very expensive. And if we think of whether this one country can maybe, like Estonia by itself with its resources and financial resources, can do it alone, I'm not sure. Of course, probably we need to work all together, right?
Yes, like NATO. I mean, we need to cooperate with, and we do cooperate in Estonia with many good friends from United States, Sweden, Japan, and Finland, where we have significant expertise and support for the national effort on the developing of the capacities, but also from Fermi Energy has a shareholder in Vattenfall, which is the national utility of Sweden that operates their nuclear power plants and prepares to build new ones. But also in the Baltic context, yes, we do need cooperation, and this is definitely not. This is definitely the most complicated and capital-intensive energy source. But there is a similarity with higher education. It takes a lot of effort to acquire or achieve doctorate degree. Have done it. It was 9 years of work for me, but it was worthwhile investment, because it is the only way that you gain actually new knowledge through rigorous learning. And the same applies in the energy. Yes, it is possible to do cheap imports of solar panels from China, but they do not add that fundamental value that this base load capacity can provide for decades and decades and decades. So it's there's additionality, but also some elements. You can do multiple primary educations, but it doesn't add up to higher education of doctoral degree. So the same applies in the energy. You can have
Yes.
a lot of solar power, but it doesn't add up to the base load what we need in the winter.
Mm-hmm. You have evaluated also several these SMRs and their designs, including Hitachi's, General Electric. What are the decisive factors for choosing the final technology, and what are the realistic timeline? What do you see for this first reactor to go online, let's say?
Yeah. So since 2019, we started to take note of different technologies. There are advanced nuclear reactors, but we very quickly learned with molten salt, fast reactors, and so on. But we very quickly learned that when it comes to power generation, the proven technology is what can be actually invested in. And also what we need to keep in mind, we are in European Union, we have the environmental impact assessment, which requires you essentially to have a proven technology when you go to the environment impact assessment. So, and we also observed that the boiling water reactors, which are the main workhorse in Finland and Sweden, they are very efficient, very safe and profitable. And so what is the logic to go for something exotic? And with proven technology that the regulators know, the utilities know, and have some and the fuel cycle is well known, then there is no point to go anything exotic, which immediately applies, means also that it is more expensive and less defined when you go environmental impact assessment. So for us, also the critical is that this technology is the only technology that is right now in construction. No other advanced or nuclear or small modular nuclear is in construction, and even in 2-3 years we see that no other project is license ready that would go into construction. But this unit actually is in construction since May of this year in Canada.
That's good. That's good to hear. Let's say, for example, post the Russian gas era, we are living in it now. How do you see the nuclear energy can reshape the Baltic energy mix? Can this react? Can this, for example, one reactor deliver energy independence for, let's say, first of all, Estonia, and maybe later to Baltic countries as well?
A part of it. So the real energy picture comes together with from different parts. But the fundamental thing that we need to recognize is that the 6 million population that Baltic states is currently, our power generation consumption is 28 terawatt hours. Finland, the same population, is 80,
Yes.
80, like almost 3 times higher. So we are not industrialized. So we need to increase our own, and we are currently importing more than a third of power generation. More than a third, okay? So which means that our current power generation is not competitive. So,
absolutely.
Yes. And we are right now, from Fermi Energy perspective, we're aiming for 2 reactors that are each 300 megawatts, so combined 600 megawatt. And we know that the oil shale that will be coming offline by 2035 is 1,300 megawatt. So in Estonian energy strategy that we're writing now and then is being likely adopted in end of the year, there is recognition that there will be slowly reactive, slowly, how to say, managed, dispatchable firm power 600 megawatt and 600 megawatt of fast dispatchable power, which is likely going to be gas. Okay. But for the Baltic context, or base load actually, the base load that is required all the time is actually like 3,000 megawatts. Especially if we think 2030, 2035. So out of this 3,600 is not even a half. It's not even a quarter. So it's a bare minimum from the Baltic perspective. Because also Daugava is really nice river, but it doesn't have water all the year. So some months are quite low water flows.
Yeah, is it true that also in the current strategy, Estonian electricity strategy, Riga thermoelectrocentrals, they are one very big part of Estonian strategy at the moment?
The Riga, so Estonian strategy is the Estonian strategy, which I think is a problem that I also highlighted, that we need to have one Baltic energy dispatchable energy strategy.
Yes.
And it's so silly and simple-minded and this village idiot level if we think there is a Estonian strategy, Latvian strategy, and Lithuanian strategy. This is what I mean, it's pointless because we're from the February we're the same frequency area, right? Physically every second, and we are the same price area. The prices are more or less 1-2% the same, and so. But currently, we don't take note of what the real knowledge is lacking. What is the Latvian Energo strategy with Riga Tech 2? And actually, Latvian Energo itself, I don't think that they know whether they will continuous investment after 2028 to operate the Riga Tech 2 after this period, because it requires significant investment,
Exactly.
right? It's not free money that they need to put there to operate it for next 10 years. And the question is does it make sense given how expensive the gas and CO2 is going to be?
Yeah, I think that the question is about the willingness of our government to actually come together and realize this villageness, as you mentioned this term. It's interesting because, of course, currently ST Energia and Latvian Energo, they are thinking of their own businesses and their own plans and think about how they can how they can benefit their owners, but this is a very short-term strategy, very short-term thinking.
Indeed. But nuclear absolutely requires mature, grown-up thinking, that you are secure in your independence and your self autonomy in long term, in decades. And there is no stronger statement than building nuclear power plant that operates for 68 years. Like it has a longer lifetime than a normal school, or well, it has a lifetime of almost like a university. So
Exactly.
yeah, it requires that kind of mentality that we need to grow now that we have been for 34 years independent. And so we are already becoming more or less grown up, right?
I hope so. Yes.
Yeah.
Kalev, you know, of course, how nuclear power is often faced with the skepticism and what Fermi Energy has learned about the communicating, say, about the safety and transparency. What ideas you have right now?
Well, there are many things that need to be said. One is that nuclear energy is very, very rigorously internationally regulated. International Atomic Energy Agency is not only inspecting Iran and North Korea, but also the member states that pursue nuclear energy, and they help them. They help very, very, very significantly, and I have also kind of audited Estonian Nuclear Energy Working Group report that was the basis of the parliamentary decision in June of 2024. Second is that our neighbors are very interested in how we prepare our capabilities and how we invest into that. Third is that not only the regional, but when we are looking at the technology, that this technology will be licensed, has been licensed in Canada. So also the operational readiness, we learn from Canada. The construction readiness, we learn from Canada, but also our important partner is South Korea, or Samsung from South Korea, that actually has built nuclear power plants. So, and on the fuel cycle, we cooperate with Vattenfall that has already purchase agreements for the uranium enrichment, conversion, and final fuel manufacturing. So it's important to recognize that in this sector that seems quite exotic to most population, there is well-established industry that has operated safely and well thought through procedures for decades and decades. And that is the reason why in European Union, we have had no of the nuclear power plant release events, okay, for decades and decades and decades. It's been well regulated. And there have been no severe, significant incidents on safety. And we have more than 100 units operating in many, many European member states. So it has been, in any state, it can be safely said, it is profitable, highly valuable and necessary tool to have energy security and lower cost of electricity. Because right now, today, the power prices in Baltic states is 130 euros. Yeah, it's very expensive. And if we want to have increase or if we want to have for the consumers lower costs and
or
we
economic
want to have growth in
activity,
economy,
like industrial,
we can't get there with this kind of energy policy that relies only on wind and solar and then gas. It's too expensive.
Yeah, the mix is expensive. Yeah, because a lot of companies investing in many different areas. It means that who is going to buy and how this mix will look at the end. At one point, I think that maybe for the governments, the good idea would be to invest in the infrastructure and in all the cables and everything.
Interconnections. Meaning,
Interconnections.
let's import more, and then it's easy.
Yeah.
Look, this is also of course we are connected with Finland, and this is one kind of a popular idea. But the problem with that idea is if you look at the reality, and the reality is that yes, we have 1,000 megawatt connection with Finland, but the power price difference is still 30-40 euros between Estonia and Finland, because fundamentally our generation mix is more carbon heavy. And until we get our mix in order, there is no hope that our imports that we are providing and sending 200-300 million euros a year to Finland, that this will get our prices down.
Hydrogen is emerging as a cornerstone of the future energy mix, a clean, versatile fuel that can store renewable power, decarbonize heavy industry, and stabilize energy grids. Yet today, most hydrogen is still gray, made from fossil fuels with major CO2 emissions. Achieving cost parity between green and gray hydrogen is therefore crucial. It means transforming innovation into affordability, scaling technologies, cutting electricity costs, and developing efficient electrolysis systems. Only then can green hydrogen truly power a net zero economy. Meet the minds behind Latvia's most promising green tech innovation. In an exclusive MedianReport interview, Andris Šutka and Alens Martini, co-founders of ProtiumTech, reveal how their breakthrough acidic electrolysis system could make green hydrogen as affordable as gray, without harmful membranes, and of course redefine Europe's energy future.
What were the biggest scientific or, let's say, engineering breakthroughs that allowed you to turn your research on this acidic electrolysis into a commercially viable technology? Andres, maybe we'll start with you.
Yeah, the breakthrough. It's an interesting question. The breakthrough was basically the idea we had that we could perform the coupled electrolysis in acid media, and then we had the idea that we could use tungsten oxide as a redox mediator. And right now we know that there are other materials which can be used actually, but at that point we had the idea that this tungsten oxide could be suitable because it is chemically stable in acid. It has a channel-like structure where these hydrogen ions can intercalate. It is also, because of this reason, it is also has been used in smart window electrochromic devices and so on. And basically, we made the electrode from this material, and it worked out. And that was the main breakthrough. When we calculated the efficiencies and produced gas amounts, then we find out the efficiencies are very high. And relatively high, comparable to commercial products already in the first tests, and also we had this huge difference in energy consumption in different steps. So immediately had idea about flexible energy management, which is enabled by our concept. Yeah.
Mm-hmm. Reportedly, it needs 4 or 5 times less energy how it is possible, how it's with this. I think that the basically the question is, how do you achieve that, and what it means for the future cost of green hydrogen?
It doesn't consume less energy for producing the hydrogen, but we can lower the price because of this energy management, and there are like these two steps. One step is energetically costly, and when we can do it when there is surplus energy, so energy doesn't cost anything at that point. And when the energy is expensive, then we can use another step to produce hydrogen, and then in this step the efficiency in some cases may exceed even 300%. So we are doing this very cheaply with little energy with this step, and then and in such a way we can reduce the cost of this.
Mm-hmm. Alan, I see that you are now in a collaboration with Repsol, and this small but I think significant investment signals quite strong international confidence in you. So, what are the next steps? How you are going to scale from this collaboration?
And that's a good question. I would like to know the answer as well. But to be honest, yeah. So the next target, together with the Repsol, is to scale to 50 kilowatts, which is basically the normal next step. Because normally, when you get from the lab, first of all, your target is to reach something around the 5 kilowatts. So to test it in the, let's say, some smart industrial so it's not smart, but small industrial setting, and to see whether it works the same as in the lab or not. But then, no one's kind of interested, if you talk about the corporates or whatever, no one's kind of interested to test the very small devices because it doesn't solve anything. It kind of shows you the data, but it shows just for you, not for them. Like, basically, like, it's not a help for them at all. So, like, the first kind of size or the power capacity, which is interesting for the corporates or for your potential clients, is starting from basically 50 kilowatts. That's why that's the next target. And that shows the scalability, which is basically when we produce these kind of modules of electrodes and connect them into the series, because that's an important step to show that we can do that. We can build the modules, we can connect them into the series, and like putting that together, that works. And yeah, so within the next year, we're gonna push ourselves to the limit. So to be able to go through the certification, because of course the hydrogen is kind of very it can be explosive, so you have to go through some certain certification processes, so to prove that it's safe and there won't be any leakage and stuff. And and then the target is to get this pilot project, to deploy the pilot project with the Repsol.
Yeah. The important point here is this modular system. So if we have modules, and we can basically multiply and connect these modules in every scale the client needs in future.
Yes, Anders, the patent is pending right now, and it's pending on what? On technology, on this two-step
yes
technology, yeah.
Yes.
Mm-hmm. Okay, Alan, you mentioned targeting heavy industries as your main customer base. Do you have any specific sectors in mind, maybe where the application could be? I mean, the green hydrogen can benefit more.
Yeah. Well, as you said, the largest consumers of hydrogen is heavy industries, and that includes fertilizers, chemical industry like steel producers, cement, and so on. So basically, they're using gray hydrogen, but it's like it's not good for the Mother Earth. It consumes a lot of CO2 emissions, and gray hydrogen is responsible of 95 or 6% out of all CO2 emissions produced from the hydrogen.
And they need to reduce it by 2030.
And they need to reduce by 2030, I believe. And so normally they should start act. So so that's why it's your main target if you're operating in this area is to target the heavy industries because they use hydrogen, but they use gray because it's cheaper, and currently the problem is that none of the new or existing solutions can match the production price of gray hydrogen. So answering your question, it's like we don't divide those industries like this is like more suitable or not because they're pretty much the same. They all use the hydrogen and they're all consumers. So what we need to do is to provide something which could produce the green hydrogen in the same range, in the same price range.
Yes, I just thought on the spot that these could be actually very good strategic investors for you. I mean, you go to Schwenk, for example, and say, hey, we have this interesting technology. It won't really cost you millions to create a prototype. If that works, it will work for you, and probably we can build something together, maybe a side business or sidekick. I think that's a good idea to go for money, isn't it?
Well, I have tried. If I'm honest, like to talk about let's find some collaboration opportunities. But of course, what you do normally, you target, as you said, the large names, the big fishes, as for example Bosch and so on. But they are investing around many technologies, including the electrolyzer technology, same as Repsol, for example. I know that we are not the only ones in whom they invested. So the same goes with the Bosch and all Siemens and all the big names, And so normally, yes, now we are in the very early stage, means that our valuation is not very high. So basically, that will be more like cheaper to buy themselves in and to kind of to build something together, but at the same time, the technology hasn't proven itself yet. So basically, that's a huge risk, and they don't. Well, the money is kind of not an issue for them, so they don't kind of care. Whenever you can prove that it works, and you have some like also reference letters from the industry that this solution really solves our problem. Like we can finally get rid of gray hydrogen, for example, and start pushing only for the green, and so we hitting the targets of European Commission and stuff like that. So basically, yes, at that point, you can start to think about selling your company or build something, or, I don't know, so maybe to kind of reshape your business model to some sort of a licensing. So given basically for them the access to build your technology, but you like maintain your IP, and there are many opportunities, but you have to prove the technology works. So.
Mm-hmm. Yeah, and thinking, for example, about the Middle East market, wouldn't that be a great fit? Because I think that they care more, at least in words, about green solutions.
One thing I learned about the Middle East market is that they need and they want to make the largest and the best of everything. And last year I went to GITEX, and of course that was my first experience, even outside the Europe. That's why I learned a thing or two about how to behave, act, and stuff like that, and also about the market in the Middle East. So And so what I learned is that, as I thought that, for example, the UAE is of course, UAE and the Saudis are very promising markets because they are building in their strategies. There are a lot of money meant for the green technologies, especially for the wind farms, solar farms, and that includes also the electrolyzer technologies for green hydrogen production. But what I learned as well is that also Oman, which is not kind of a huge player like in the Middle East, although it is, but first of all, whenever it mentions the Middle East, you start to think about the Saudis, UAE, Qatar, for example, But Oman has they already have a strategy for the green hydrogen production, and their targets are very, very large. I mean, what they want to hit with the yearly production rates. And I think that market is very promising. Of course, they have not only the money to build that, to buy the technology, but also kind of they have the solar capacity like no one no one other has, and yeah, and also that, yeah, that of course that makes them very promising, a very potential market for technologies like ours.
There have been many discussions, panels, and newsworthy onstage interviews during this week's IMF and World Bank annual meetings in Washington. What I want to present to you are the remarks from one of the main debates about the global economy from the main guests of the event. Let's watch them.
When we were here in April, there was a big trade shock and tremendous uncertainty of what the impact may be. Our fear at that time was that there could be contraction of growth, and that was reflected in our projections. Since then, what we witness is the world economy has been remarkably resilient. And when you look at the reasons for this resilience, two stand up. One, countries over the last decades have built strong fundamentals, good policies, strong institutions, and this is particularly applicable to a big part of the emerging market world. Good policies pay off. Two, the private sector, also over these last decades, has gradually moved forward for a bigger role in the economy, and private sector is more agile. And then we had the so far nice surprise that countries decided not to retaliate in their vast majority when hit by tariffs. So with only two exceptions, we have 191 members. The US and 2+2, China, and in the beginning Canada, retaliated. Everybody else said, thank you, but no thank you. We don't want a trade war.
If the US is going to reconfigure trade, we've got to reconfigure trade as well. We've got agency. The middle powers and the smaller nations of the world have agency. Just think of what's possible. The CPTPP, the EU, the GCC, ASEAN, they're not small trading arrangements, by the way. If the CPTPP and the EU start collaborating with each other, that's about 42% of world trade. If ASEAN and EU start collaborating with each other, that's more than a third of world trade. So if you want to reconfigure world trade, let's reconfigure world trade. Let's go for a new arrangement that will allow developing countries in Asia to continue to rise up that ladder or value added. Trading first within each other, within ASEAN, within Asia, but very importantly, across the world. And the good, this is a blessing of the US tariffs. It's spurring regional integration and it's spurring bridges between regions.
Going into 2025, we have likely a moderating monetary policy in the United States. We've already seen that in Europe. That's very helpful, and that's also extremely helpful to small caps. I do need to call out small cap companies. Going from that change in monetary policy, small cap companies are facing a situation where 40 to 45% of their earnings are going to paying interest expense right now. So they just cannot reinvest their capital to grow. They're having to use their capital to pay off debt or to manage their debt, and that's very constrictive. So as we are seeing some changes in monetary policy, you're seeing the small caps starting to lift up as well. But the rest of the market, in particular the large caps, have had an incredible environment around them. There is an incredible technology that is coming. It's on the scene. It's extremely early, but it's already having effect. I think that people, as a general thesis, tend to be very excited and enthusiastic early. And at the end of the day, this technology, in my opinion, will be the fastest moving and most consequential technology that we'll see in many decades. It's an incredible technology that will come, and I do think it will achieve a lot of incredible productivity gains over time. It takes time, though. Yeah. You know, it's very early, and people get very excited, but the fact is that as we build out the infrastructure, the models are improving every single month, every single quarter. The way that the models are being able to be brought together now through agents and digital workers to be able to string together capabilities will drive productivity. And investors are understanding that. So investors are there to predict the future, and they definitely predict a bright future.
Longer term yields. People are saying, okay, you want me to lend you money for 10 years, 15 years, 20 years. God knows what would be then. You need to pay me more. So that, I think, is something that policymakers here may not be comfortable with because certainty is preferable. But I think we should embrace it and say, hey, that opens up more opportunities because there are multiple combinations of relations that could be winning relations.
We have an internal market, which is the largest economic zone in the world, still at the moment. But we have inflicted upon ourselves one border after one barrier, one license requirements after another hurdle that entrepreneurs and corporates have to jump over. I think the momentum is here to now reduce as much as possible of those internal barriers. And the excellent study produced by the IMF, which indicates that on goods, it's as if we had a 40% tariff, and on services as if we had 110% tariffs, is, you know, a big kick in the butt to say, get on with it. Remove that 40%, remove that 110%, and don't complain about, you know, your status. The second direction we are heading into, and as often with Europe, it goes one step at a time and there is no big bang, so to speak, is on the Capital Market Union, where we really want to be attractive to non-European capital, number one, so investors can come over. And we want to make sure that the savings that are currently massively into deposits, you know, even, you know,
they're here in the United States. 300 billion of those of yours European savings are right here.
Yeah. So we want to say, you don't have to travel the Atlantic. You can just stay here at home and generate a good yield. One last point, because Kristalina prompted me on that. Yes, the long-term yields have behaved in a quite surprising way, and they have gone up. And it's certainly attributable to a risk premium that is expected and required by the investors. But it's particularly true in the 30 years, not so much in the 10 years. And it's not as heavy as we had feared in the first place. It's come down a bit, and I think that the risk premium requested is now much more reasonable by all standards.
I was thinking back. Portugal was such a success story. They started off in a mess. They ended up 4 years later, not 10 years later, 4 years later as a success story. They repurposed both revenues and spending. They cut spending on education and health, and it may appear, oh, terrible, austerity is going to lead to hardship. What happened? The educational performance caught up with the rest of Europe. The health performance caught up. They ended up cutting 6% of GDP from their primary fiscal deficits, and they became a vibrant economy. They expanded their social safety net for the poor. So they repurposed spending away from the middle class and the upper middle class to the poor. They cut out the waste in healthcare spending, which, by the way, is a huge issue in the US and most of Europe still today. Huge issue. If you've got a back pain, they send you for imaging. If you've got a headache, they'll send you for imaging. There's just huge waste in healthcare. So think about repurposing healthcare spending, repurposing social spending in general, taking care of the poor, taking care of social mobility, and then using the resources that are freed up to address the really big issues. Think like the insurers do. Insurers have no time for ideology. They've got their bottom line, and they're starting to price very differently climate change. But act like venture capitalists. Think like insurers, but act like venture capitalists. Take risks and invest for the future.
I think the recipe that Tarmen is giving would also address the immigration problem, which is a recurrent issue the world over in advanced economies. repurposing fiscal, investing in the right place, making sure that both from climate change, poverty, people in those low-income countries are protected, will also address immigration in a big way.
This is it for today. I had a wonderful time preparing the show, and I hope that if you feel similar watching or listening to it, please subscribe to our channel, show that you liked it, leave a comment, and tell your colleagues about it. I'll be more than happy to create a pan-Baltic economics and business show listened to Latvia, Estonia, and Lithuania, and of course, outside our region. Thank you for being with MedianReport, and see you again next week.
Don't forget to subscribe. And if you have already subscribed, join Median Premium Package for only $2.99 a month for exclusive content and full-length interviews. Find us also on Spotify and all the best podcasting platforms. Thank you for comments, shares, and likes. We appreciate them a lot. This has been a production by Standout.